Welcome to Trading Lounge and the SP 500, starting with the 4-hour chart here. This has been our primary count here, where we've had wave A come down through here, an A and a B, and a C wave up here for wave B, and then looking down for wave C. So we can have a top in place. As I've mentioned a few times before, that I've never really been happy with this 5-wave structure because wave 4 is overlapping wave 1 here. So the other count that we've had for this here is on the 2-hour chart here. Let me bring it in here a little bit further. So there's actually 2 counts in here, but well, wave A here, an A and a B and a C for wave B here, and down for wave C here to make wave C here, and then we start an impulse wave to make new highs up here. And in that case, we've got 1 and 2 here, and then 1 and 2 and 3 and 4 here, and then 5 here for the 3rd wave, the 4th wave, and the 5th wave moving higher, so making a new high above this high here. So that's possible, and it also resolves this problem down here, as I've mentioned before, of wave 4 here overlapping wave 1, in this case wave 1 and 2 here, then 1 and 2 and 3 and 4 and 5. That produces a better count in that way. And what we thought about all of this too, as we spoke last time, is that if the 2950 becomes the retested resistance, well then this wave 4 wouldn't be in play at that point, because the 38.2% retracement level comes in on that, well, very close to the 2950 here. So as long as that market stays as support, then this market can be bullish. Yes, it can be bearish, and we're going to have to get some strategies within here, and we need to talk about this little space in here, but this has been the sort of bigger picture sort of count. This can also be counted differently as well. It could also be counted as 5 waves up for 1, an A and a B and a C here for wave 2 here, and then moving even a bigger picture moving higher as well. So that's on the cards as well, and there's also the count we've got on our website as well. But it all boils back down to this little structure here, and will the 2950 remain as support? Because if it remains as support, then we've got a bullish picture here. If this 2950 becomes the retested resistance, then we're in for a bearish picture, and then we need to be on the short side of the market. But let's just drill into this little area through here and examine that. So at first glance here, it doesn't look like a nice impulse wave to the downside, does it? It doesn't look like 3, 4, 5 here to the downside here. It's all a bit wonky in here, so we need to talk about this here at the moment. But also too, if it was 5 waves down to this point here, then we would look at this as an A and a B and a C correction here, coming back up, well, very close to the 61.8%, but we always gravitate to the closest largest number, and that case would be 2980 here. So the 61.8% is just under the 2980. If the 2980 became a nice tested support here, then we would need to be on the long side here. But if this in some way counted as 5 waves down here, then this would be the A wave, the B wave, and the C wave up here, and then we'd come down from that point, and we could also probably look at this in a slightly different manner as well here. If a bit too wide there for that, we can do a better job than that. So okay, well, let's just do that then. So let's just look from this point to this point here. I was going to take you into the tick chart first here, but so this is the 50-60% retracement level here. So that's roughly at 29.68-69. So we could say that if this level here becomes the resistance, we could also short from that point there as well. So I'll just clear that. We're going to put this here, and we'll just put this here as a thin line, just meaning half position, but that could also be a third of a position, whatever you decide to make it. Yeah, so look, that takes care of the short side. We haven't examined this particular structure yet. This particular structure here can count as an ABC correction, and the 61.8% is pretty much where it is at the moment, so just a tad lower here, so that's where that is. So I won't put in anything there, we don't need to. But that's the retracement level back, so it's where those open and closes are. So if this here becomes, normally for us to go long here, we would need to see the arrival, the reaction, the first high above the level, and then an A and a B and a C correction here, and then up from there. So at that point we can look to borrow these here. Let's shorten this one up a little bit. So this can goes on top there first. Once that comes in, don't chase that high, wait for it to fold back, and then we go long from that point there. So that's our long trade setup, which is above the 61.8%, and that would send us bullish at that point. Any move, if this level here, 29.70 here, became the retested resistance, then we can get a small position on the short side. And then if the 29.65 becomes the retested resistance, we can go short from there as well. This market is currently in group 2 here, and group 2 is important, like group 1 here. This is group 1 here, 10, 20 and 30, and this is group 2 here, 65, 72 and 80. So when a market normally is working with a large number, like, well, the largest number in the little region here, so this, in this case, the 3,000 here, then we would use group 2 here as being the the resistance at the first stage, and then support, and then this becomes the resistance up here. So these group 1 pegs the market back to the closest largest number, and group 2 here pegs it there as well. If group 2 here becomes the retested resistance here, then we short from that point. In this case here, it spiked through here and then moved back up. So in this case here, we would look to short under here on the setup there. If we just go into the tick chart here and have a look at that for a moment. So we can see that the market's dropped back through here, come back and retested it here, but it never made that new low here to trigger us in on the short trade here. Got me? And then that would have made all of group 2 here, the resistance, and it would have been a rejection of this closest largest number here, but it hadn't occurred at that point. So the question here now is, with this tick chart here, this is 100 ticks here, just bring that in here, is that 5 waves down here, or is that what is that move down here? If we look at the cash market for a second, this is on a 5-minute chart on the cash market, we do have this this gap up here and making that high here. So I guess if we use that high here, if we decided to use that, then we'd look at this as wave 1 here, wave 2 here, wave 3 here, wave 4 here, and wave 5 here. And then we can look at this here as a little ABC pattern here for the A wave, back for the B wave, and the C wave here would be 1 and 2 here, and the third wave up here would still need a little 4th and a 5th wave here, which will take us to above the 29.80 here, and that would be the first high above the level there that we talked about. So yes, by all means, this can be counted as 1 and 2 and 3 and 4 and 5 here. If we take that gap here, that spike and closing high here as the high, which we kind of should do in this instance, but it's rather flimsy, you know, it's a bit flimsy, so it didn't trade up there, it just gapped up there, which I suppose is trading up there in a way, but it's like this little move here. We can see that it built over time, it's real, I mean, they're both real. This one carries more weight than this one. Does it? I don't know. Okay, anyways, that's the point of contention anyway. So, because if that's not the high here, and this is the high here, then then this becomes an A wave, a B wave, and a C wave down to this point and makes it corrective at that point. So that's the problem that we've got at the moment. Damned if you do, damned if you don't. But that said, we can go short under these levels here because that would be a total breakdown. And we can go long. We don't want to go long until this leg here is finished. So in this leg here, we can see we've got 1 and 2, and then 1 and 2 in here in the third wave. We still need this little pattern here, sort of flipped over and put over here, which will give us the first high above the level over here. So in this case here, this market's already, let me have a look here. I think there's still one more to go here. So that would give us, I can draw on this side here, this will give us the arrival, the reaction which is occurring now, the first high above the level, and then this little pattern here. So this would be the long trade here. Another way to look at that, that's 2980. Then we can also, that's the closest largest number, isn't it? So we'd have group 2 below that. So group 2 would be holding that. And then above that would be group 1. So 81, 82, and 83. So another way to look at this is that if 83 here becomes the support, you could also look, if number 3 becomes the support, then it's leaving the closest largest number, which is 80, and people start to look at the number 5 there, which is the second strongest number in the market after number 1. So then that lifts it really quite high at that point, way beyond the 61.8%, which is in here somewhere, and we'll see that play out in that consolidation there. So on the long side, we can go long on 2983 as tested support, or the first high above the level as a classic trading levels pattern, and you know that pattern, which is this one here. So if we look at this as 2980 coming across here, we have the arrival, the reaction, the first high above the level, blah blah blah, and we could go along from that point. But you need this pattern to play out. You need it to migrate from being resistance to support, and then the triggers to take it to the long side. The market needs to prove to you that it's going up, and it will take your triggers there. So how do we count this down here? Well, we can count it as, you know, we can go wave 1 here, wave 2, wave 3 here, but then wave 4 is way over here. It is a corrective move up there. So we would put that there as the A wave there, the B wave here, but then that doesn't give us 5 waves down here. We only got 3 waves down. So this move in here is actually 3 waves here. So we can put that there as an A, B, and C wave in here to make it corrective. But also at the same time, this is where it gets a bit annoying, is that we could look at this as wave 1 here, wave 2 here, and we can look at this as wave 3 here, and an A wave, a B wave, and a C wave for wave 4 here, and then down for wave 5. I know you're probably chucking tomatoes at this stage, but that's all I can come up with at this stage, so take it easy on me. And this here, we could look at this as wave 1 here and wave 2 here, then wave 1 and wave 2 here, and then this is going up through. So that would need to prove that at that particular point in time. Otherwise, this A, B, and then up here, so an A and a B and a C here for the A wave, back for the B wave, and then up from that point. So yeah, it's quite a strong move here. So it can be bullish in relation to wave 1 here, wave 2 here, and unless that's a truncated 5th wave. Another idea just came in. Let me just examine this little guy here for a second. Bit messy. I'm just seeing if this is a 4th wave and a 5th wave not making a new low here. I don't think it's the case, because even this has come back up quite high here. So this all looks more corrective in nature, bullish corrective in nature, but just checking if possible. Got to check every little thing. Sometimes it's not clear, and you've got to kind of round it off to the, you know, the logical next step, so to speak. So this will be the top of a 3rd, a little ABC for the 4th here, and then a fifth wave here, which will give us that high for the long trade. So we can go short below this 72 here. If that 72 becomes the retested resistance, we can go short from that point. So let's just go back to our hourly chart. No, I'll just leave it at that with the 61.8% there. You can do that. You can put a smaller trade in here if that becomes the retested resistance at that point. So that's where it's at for me. It's just basically taking the triggers here. It's just a shame we don't have a nice clear pattern here. If we had that, then it wouldn't be a problem at this point. And we've got this issue here as well, which I've explained on the 2-hour chart. And this is pretty much the 38.2% retracement level back for that for that alternative count here as well. Not quite, but close enough. Taking it from that point to that point there, 38.2. So close enough, really. Yeah. As I said yesterday or the day before, that we need that 29.50 there as the retested resistance for this whole trend to break down at that point. And, you know, the wave 4 here, if this market went through the this trend line, wave 4s break trend lines, that's what they do. So be mindful of that. Alrighty, well, that's that. Let's see what unfolds. Alrighty, thanks for the support. Cheers.